Hello students and hello everyone. This is Teacher Angel and welcome back to our accounting online video lessons. For today, our lesson is all about provision. At the end of this lesson, the student should be able to understand the nature of a provision, to know the conditions for the recognition of a provision, and to know the measurement of a provision. This lesson on provision comes in two parts. We have the first part, which is focused on the provision, and the second part, which is focused on the contingent liability and contingent asset. So kindly watch the next video lesson on contingent liability and contingent asset to know more about the accounting treatment for contingent liabilities and assets. So let's begin with the topic on provision. So first we define what is a provision. So a provision is an existing liability of uncertain timing or uncertain amount. So the essence of a provision is that there is uncertainty about the timing or the amount of the future expenditure. So in this case, we are not yet sure when the liability is to be settled, specific date or specific due date or maturity date, when there should be payment or transfer of assets, or it could be that we do not know the exact amount of the liability that will be settled. It is this uncertainty that distinguishes provision from other liabilities. Unlike the accounts payable, the notes payable, bonds payable, wherein we already know when will be the payment date for those liabilities. If we have tax payable, premiums, there is already a date set for the payments of those liabilities. So the liability exists at the end of the reporting period, and it's definite that there is a liability, but the amount is still indefinite, or we do not know yet the exact amount that would be paid, or we do not know the exact date when the obligation will be due. And in some cases, the payee cannot be identified or determined. Actually, a provision may be the equivalent of an estimated liability, or it could also be a loss contingency that is accrued because it is both probable and measurable. So when we speak of contingency, so this refers to a future event or a circumstance which is possible, which can happen but cannot be predicted with certainty. And therefore, we need to provide for this unforeseen event or circumstance because maybe in the future, base na atay bayaran. So, kinahanglan nato siyang pangandaman. That's why there may be a loss contingency. When do we recognize a provision? So, according to PAS 37, it provides that a provision shall be recognized as a liability in the financial statements under the following conditions. There is a present obligation. It could be legal or constructive as a result of a past event. Second, it is probable that there is an outflow of resources embodying the economic benefits that would be required to settle the obligation, and the amount of the obligation can be measured reliably. So based on these conditions, okay, so we have the three criteria or the three characteristics that should be present. So there should be a present obligation, there's probability of outflow of resources, and the amount must be reliably measured or can be reliably measured. So let's go to each of the conditions. First is present obligation. So, naa na tay tulubagon karon. The obligation could be legal. It could also be constructive. When we say it's legal, there is a legal obligation if that obligation arises from a contract, a legislation, or other operation of law. Meanwhile, when we say constructive obligation, this is an obligation that is derived from an entity's actions where the entity has indicated to other parties that it will accept certain responsibilities by reason of an established pattern of past practice, published policy, or a sufficiently specific current statement. And as a result, the entity has created a valid expectation on the part of the other parties that it will discharge those responsibilities. Okay? So, ang legal obligation arises from a certain contract or by by virtue of a certain law. Pwede po siyang legislation or pwede po ng private contract between two parties. So, if we are legally obligated, it means that we have the obligation or duty that is enforced by the court of law. So, it could be a debt and it could be a legal responsibility that will be carried out based on what the law asks. When we have constructive obligation, so this is defined here, diba, that the other party daw is informed or naa na siya idea na the entity has certain responsibilities that it has accepted, and later on kinahanglan nila ng i-fulfill because the other party already has taken note of that responsibilities being accepted and naanay valid expectation nga i-fulfill ni entity whatever man gani ang iyahang discharge nga responsibility. Okay, so the constructive obligation here arises from the entity's action, though which it has indicated that it will accept the responsibility. Okay, so how do we differ the two? So when we say a legal obligation, it requires a suitable behavior or it results in a fine that should be at least be economically equivalent to the failure to do what is adequate. Meanwhile, if it is a constructive obligation, it is based on an expectation of continuing past behavior or a future behavior when an expectation of this has been created. Okay? So, kani siya is na gi-enforce gining constructive nga obligation later on, ma-enforce siya because nanay expectation on the part of the other party. Meanwhile, the legal obligation, although na may expectation, but it is embodied na in a contract, a legislation, or a law. That's why it contains certain legalities. That's why it's a legal obligation. Otherwise defined, a constructive obligation exists when an entity from an established pattern of practice or stated policy has created a valid expectation that it will accept certain responsibilities. So, that is the first condition. There should be a present obligation, whether it's legal or constructive. Then we have the second condition, not necessarily second condition. So, continuation is just a first statement. It comes from it results from a past event. So, there is a present obligation because there was a past event that brought about that obligation. So, the past event that leads to a present obligation is called as the obligating event. An accounting provision cannot be created in anticipation of a future event. So, the event must have already occurred, which gives rise to the legal or constructive obligation. So an obligating event is an event that creates a legal or constructive obligation because the entity has no realistic alternative but to settle the obligation created by the event. So wala gyud laing pamaagi but to fulfill or to perform or provide whatever was promised or was declared niya nga i-fulfill before. So kinahanglan yun tumanon. So mahimo dyan siyang obligating event. This is a case where the settlement of the obligation can be enforced by law and or the event creates valid expectation on the part of the other parties that the entity will discharge the obligation. So muna siya, the first one, di ba, refers to the legal obligation and the second one is constructive obligation. So the second condition is the probable outflow of economic events. So an outflow of resources is regarded as probable if the event is more likely than not to occur. So may pasabot niya ng more likely or not, more likely than not more likely than not to occur. So meaning, mas dako ang chance nga mahitabo siya compared sa chance nga dili mahitabo. Again, matawag siya nga probable kung mas dako ang tsansa nga mahitabo ang event kumpara sa chance nga dili mahitabo ang event. So meaning, kung probable na siya, there is more than 50% likely or more than 50% chance that it will occur or the event will occur. So dapat more than 50% para matawag nga mas dako ang chance nga mahitabo kaysa sa chance nga dili mahitabo. Kung 50% siya or less ang chance nga mahitabo ang event, then that means the event is possible. And kung 10% or less likely or very slight occurrence, then it is referred to as remote. So therefore, we have here three probabilities or chances of happening. Okay? So actually, naapag yoy mas higher ani niya, natin gitawag nga virtually certain, meaning sure na gid kaayo. That's 100% sure or almost 100% nga sure. So, na siya virtually certain. Ang probable is, ang minimum niya is more than 50%. So, therefore, 51%, 53, 59, 60, 70, 80, or more. Okay? And then, ang sunod is ang possible. Pag possible, 50% ang maximum. Okay? And then, less. 50% or less. Then, kung remote siya is maximum of 10% maximum. And then, lesser or zero chance. Okay? So, balik ko na to. Matawag siyang contingent liability kung probable nga na ay outflow of economic events. So, therefore, na ay more than 50% chance that we will be obliged to settle the liability, and that means there would be an outflow of economic benefits. Then the third condition is that the amount can be measured reliably. So according to PS 37, it provides that the use of estimates is an essential part of the preparation of the FS, and it does not undermine or lessen the reliability because not all of the items there can be exactly or accurately measured. So for example, when we try to determine the budgets, so we have the estimate kung pila percent ang iyang uncollectibility. It may not be the exact amount, but based on experience, based on management's judgment, Of course, gamitan man gyud na niya og basis before siya mag-decide kung pila ang amount na iyahang i-assign. So, more on intelligent gina siya nga estimate. So in here, since we have the uncertainty as to the amount or the uncertainty as to timing, it does not mean that we cannot estimate properly the amount of the liability. So kinahanglan it is measurable, and the measurement can be and the measurement of the amount can be estimated reliably. So this is especially true in the case of provision because by nature, a provision is more uncertain than most items in the statement of financial position. So the standard suggests that by using a range of possible outcomes, an entity usually would be able to make an estimate of the obligation that is sufficiently reliable. So, if dili nato ma-measure reliably ang liability, then we will not recognize the liability. So, importante gid siya nga condition. Kay even if present tong duha, okay? So, na ay present obligation and then probable po siya, pero dili nato ma-determine ang amount, then dili ta maka-provide og provision, or we cannot recognize the provision. So let's continue. So how do we measure the provision? So the amount recognized as a provision should be the best estimate of the expenditure required to settle the present obligation at the end of the reporting period. So what is this best estimate? So this is the amount that the entity would rationally pay to settle the obligation at the end of reporting period or to transfer it to a third party at that time. Where a single obligation is being measured, the individual most likely outcome adjusted for the effect of other possible outcomes may be the best estimate. Okay? Pero kung naay continuous range of possible outcomes, and each point in that range is as likely as any other, then you can get the midpoint or the average, katong simple average. Where the provision being measured involves a large population of items, so kinadaghanan kaayo ang population or dako ang population, then it may be necessary to weight the possible outcomes by their associated possibility. And this is called in statistics as the expected value. So here is an example for the expected value method. So we have the entity sells goods with a warranty under which customers are covered for the cost of repairs of any manufacturing defects that become apparent within 6 months after purchase. So if minor defects are detected in all products sold, the repair cost would be about 1 million. And if it's major defects, then the repair cost would be 5 million. The entity's past experience and future expectations indicate that 75% of the goods sold will have no defects, and 20% will have minor defects, while 5% will have major defects. So there are several possibilities here. Diba? So there are 3 levels of defects dire, na ay without defect, na ay minor defect, o na ay major defect. And for each defect, type of defect is na ay probabilities. So what will be the expected value or the cost of repairs in weighted nga computation? So accordingly, diba, 75% will have no defects. Of course, we don't have cost for that defect. But 20% will have minor, so 20% times 1 million, that's 200,000. And 5% will have major defects, so 5% times 5 million, so that's 250,000. So total expected value of the repair cost is 450,000. Another example, an entity is a defendant in a patent infringement suit. So, gikasuhan sila. Perhaps they copied the model or the invention of another company. That's why they are being sued for patent infringement. The lawyers believe that there is a 60% chance that the court will not dismiss the case. So, sa pasabutan ng 60% chance nga ang korte daw will not dismiss the case. Therefore, there's a 60% chance nga mapildi sila kay mapadayon man ang kaso. Okay? So, kung mapildi sila, kung mapadayon ang kaso, o niya mapildi sila, okay, sa pikas nga kampo, so pwede nga na ay outflow of future economic benefit. So, kung against the entity ang ruling, di ba, kay mapadayon man ang kaso niya, basin mapildi sila, so, mupabor na nun sa pikas nga side, the lawyers believe that there is a 30% chance that the entity will be required to pay the damages of 4 million, while there's a 70% chance that the damages will be 2 million. So, na ay duha ka amount or duha ka estimate sa value nga pwede nilang mabayaran kung mapildi sila sa kaso. So, na ay 4 million, na apoy 2 million. There's a 10% risk adjustment factor to the probabilities of the expected cash flows, okay, that is considered appropriate to reflect the uncertainties. Okay, so how do we compute? So, multiply ang weight. So, 30% times 4 million, okay, but only 60% chance nga makabayad ta ani kay di man ma-dismiss ang case. There is a 60% chance nga padayon ang kaso. So, times 60%, you will get 720,000. Then, for the amount of 2 million, there's a 70% chance nga mao'y mabayaran. Then, times 60%, that's 840,000. So, the expected cash flow would be 1,560,000, but there is a risk an adjustment factor to the probabilities. So, what is this risk adjustment factor, by the way? So, the risk adjustment factor is usually associated in a medical or insurance-related nga cases. Okay? So, if ato ta sa insurance or sa healthcare nga mga situations or cases, so kaning risk adjustment factor gigamit ni siya in order to adjust the plan payments to ensure fair payments. Okay, so again, usually malink ni siya in terms of mga insurances and mga healthcare nga services. Okay, so kung mo basa tag mga definitions on the risk adjustment factor, ilahan na siyang ma-associate more on the Medicare or sa mga medical related nga cases. So, in here, you have the risk adjustment factor is added. So, this is obtained by multiplying the expected cash outflow by the 10% nga factor. So, you will get 156,000. So, add it to the expected cash flow. So, the total amount of the provision is 1,716,000. So, in here, again, we multiply it by 60% because there is a 60% chance that the court will not dismiss the case. So, kung padayon ang kaso, diba, 9 chance nga mapildi o niya, kung mapildi gani siya, so we have to set up the amount nga pwede natong mabayaran. And the amount of provision shall be discounted if the effect of the time value of money is material. Then we have other measurement considerations in recognizing and measuring the provision. So first is we have the risk and uncertainties. So it was defined earlier that provision will be recognize, so kinahanglan ta mag-provide because there are uncertainties in terms of the timing of the payment or uncertainty in terms of the amount. So the risks and uncertainties that inevitably surround events and circumstances shall be taken into account in reaching the best estimate of a provision. So risk is described as the variability of an outcome. And a risk adjustment may increase the amount at which a liability is measured. So as illustrated in the previous problem. As prudence dictates, caution is needed in making judgment under conditions of uncertainty so that income and assets are not overstated or expenses and liabilities are not understated. But we have to take note nga, even if there is uncertainty, it does not justify the creation of excessive provision or deliberate overstatement of liabilities. Kailangan gyud na siya most likely pod nga amount. Pero siguro nang maghimo ta og budget, dili man nato pasubraan sad kaayo, di ba? Kinahanglan realistic pod siya and most likely nga maupod ang amount nga ma-incur. So, di man siya basta-basta. So, mangutan na taon pila man di budget atong ni Agi. Sa man itong mga gastuunon, tagpilaon man ni siya karon. So, that will be an intelligent estimate gihapon. Dili lang siya basta-basta lang nga gibana-bana. Then we have the present value of the obligations. As mentioned ganiha, di ba, nga if ang time value of money is material, kinahanglan natong i-compute ang present value sa provision. And the discount rate that would be used if ever gani atong compute ang present value niya, it should be a pre-tax rate that reflects the current market assessment of the time value of money and risk specific to the liability. The discount rate should not reflect the risk for which cash flows estimates have already been adjusted. So, dili na nato i-appeal tong risk kay na may risk adjustment factor. Then we have future events. So future events that affect the amount required to settle an obligation shall be reflected in the amount of a provision where there is sufficient evidence that they will occur. For example, there is a new legislation or changes in technology. Then we also have to consider the expected disposal of an asset. So any gains from the expected disposal of an asset shall not be taken into account in measuring a provision. So again, unsa may dapat natong i-take note in terms of the expected disposal of the asset. So pag na-gain sa pagbaligya sa asset, dili siya appeal sa pag-measure sa provision. Instead, an entity shall recognize gain on disposal at the time of the disposition of the asset. So, balik ta sa first nga line. So, ang imuha daw gain, dili na siya ma-appeal when you measure the provision. So, ang gain lang niya, ma-recognize na siya or ma-record na nimo only during the disposal, during sa pagbaligya good sa asset. In other words, any cash inflows from disposal are treated separately from the measure of the provision. Next is we have to take note of any reimbursements. Where some or all of the expenditure required to settle a provision is expected to be reimbursed by another party, the reimbursement shall be recognized when it is virtually certain that reimbursement will be received if the entity settles the obligation. The reimbursement shall be treated as a separate asset and not netted. So, dili mo siya i-minus sa related nga liability for the provision. The amount of the reimbursement shall not exceed the amount of the provision. In the effect, di ba nga, zero out na siya niya, sobra pa yun. However, in the income statement, the expense relating to the provision may be presented as the net of reimbursement. Okay? So, kung mag-present ka sa income statement, pwede nga net na siya. But in your SFP, dapat lahi siya. Lahi ang asset, lahi po ang liability. How about if there are changes in the provisions? Of course, di ba, nag-base man ta sa estimate. So, pwede pa na siya ma-change later on. Like for example, tong sa litigation, katong na ay suit, di ba, na case sa korte. Unya, naaray ba na nga 5 million siguro ako mabayaran, 2 million, 3 million. But since it's still uncertain, napay possibility nga ma-change pa na siya, di ba, later on pag mahatag na ang court decision. So provisions shall be reviewed at every end of the reporting period and adjusted to reflect the current best estimate. The provision shall be reversed if it is no longer probable that an outflow of economic benefits would be required to settle the obligation. Kaya basin di later on, diba, mahimo na lang siyang possible. O sa ganitong possible, mas dako ang chance nga di mahitabo kumpara sa chance nga mahitabo. So, kung mas dako ang chance nga dili ta kabayad, di ba? Dili ta ma-compel nga mobayad sa atong liability, so pwede na tong i-reverse ang provision. Where discounting is used, the carrying amount of the provision increases each period to reflect the passage of time. Then, we have the use of provision. So, a provision shall be used only for expenditures for which the provision was originally recognized. Like, for example, if you provide for plant dismantlement na nakagiset nga amount para sa pagtangtang sa usa ka plant or pag-restore back to its original form by removing the equipments, diba, from the planta. So, dili na siya pwedeng gamiton to absorb environmental pollution claims or warranty payments because these items here are different, diba, from the purpose for which the provision was set, diba, before. If an expenditure is charged against a provision that was originally recognized for another purpose, that would camouflage the impact of two different events, thus distorting financial performance and possibly constituting financial reporting fraud. Okay? That's why kung unsa gid ang gibudgetan para ana, dapat adto jud pud siya igasto. Okay? So kung giset na ni nga amount para sa salaries, so dapat katong amount nga giset for salaries will be paid for salaries and not for anything else. Okay? When we talk about the provisions, for example, kung para po na siya sa pollution claims, so dapat later on, inig gasto na to or inig bayad na to is dapat para siya sa pollution claims and not for plant dismantlement or any warranty payments. Okay? Then, future operating losses. So provisions shall not be recognized for future operating losses. Remember that by definition, diba, the present obligation must result from a past event. So nanay event sa una that gave rise to the present obligation. So kung future operating losses na siya, it will still happen in the future, then dili gini siya mo qualify as provision. Okay? So a provision for operating losses is not recognized because a past event creating a present obligation has not occurred. But an expectation of future operating losses is an indication that certain assets may be impaired, and therefore impairment ang dapat nga i-recognize in case nga there is really impairment after conducting an impairment test. Then we also have to consider any onerous contract. So if an entity has an onerous contract, the present obligation under the contract shall be recognized and measured as a provision. An onerous contract is a contract in which the unavoidable costs of meeting the obligation under the contract exceed the economic benefits expected to be received under it. So if we try to define what is onerous, so that is an obligation that is considered as heavy or burdensome. Bugat kay siya nga kontrata. Wala kay lain nga choice but you have to fulfill the contract because ang penalties, ang fines, or parusa for not fulfilling the contract would be greater than the benefits from that contract. So, accordingly, wala man kailaing choice but you have to fulfill the contract. Otherwise, you have to pay for the penalties, or you have to suffer the consequences. So, again na siya present obligation. That's why we have to recognize a provision. According to PAS 37, the unavoidable costs under a contract represent the least net cost of exiting from the contract. So, ang imuhang unavoidable cost here, katong dili na nimo malikayan nga cost, would be ang pinakaubos nga net cost sa paghawa sa contract. So, accordingly, how do we determine the least cost? So, that will be the lower amount between the cost of fulfilling the contract and the compensation or penalty arising from failure to fulfill the contract. So, pili ka. Asa may mas gaan, asa man ang mas makasave ta kung tumalo na tong kontrata or ang mubayad sa penalty. Of course, if kita ang naay bayron ron, kita na itulubagon, pilion gyud nato tong mas makasave ta. So, kung mas makasave ta kung atong ipadayon ng kontrata, i-perform nato ang unsay gi-promise nato sa kontrata, then choose the fulfillment of the contract and you account for the cost of fulfilling the contract. Pero kung mas advantage nato, di ba, kung mubayad kay mas makalesta sa penalties, then choose the compensation or penalty. And that would be the least cost of exiting from a contract. So what are examples of provision? So we have already discussed this in the previous chapter, diba? All about warranties. Diba sa warranty, we estimate the amount, diba? Pila man ka, diba? Pila ka kabuok ang customers nga mamalik to pay to ask for assistance in terms of the repair, replacement of the items that were purchased from our shop or our store or our company. So the best estimate of the warranty cost is recognized as a provision because there is a clear constructive obligation arising from an obligating event, which is the sale of the product with warranty. Then we also have environmental contamination. So if an entity has an environmental policy such that other parties would expect the entity to clean up any contamination, or if the entity has broken current environmental legislation, so pwede siyang constructive, pwede po siyang legal, then there should be a provision for environmental damage. And what is the obligating event? Ano sa naka-give rise to the obligation? So that is the contamination of the property, and a provision will be recognized for the best estimate of the cost of cleaning up the contamination. Another example is the decommissioning or abandonment cost. Unsa man ang decommissioning? Pasabutan ng decommissioning. So if we're going to define what is decommissioning, so kana siya ang removal, okay? Removal from service. Okay, and decommissioning costs are the costs incurred by companies to reverse the modifications that were made in setting up that place, diba? For example, nagbutang ka og oil rigs, diba? So pag i-remove na nimo later on, pag na-exhaust na nimo to natural resources, so na gasto for the removal. Okay, and that is called as the decommissioning cost. So when an oil entity initially purchases an oil field, it is put under a legal obligation to decommission the site at the end of its life. Then the cost of the abandonment or decommissioning shall be recognized as a provision and may be capitalized as cost of the oil field. So, apil na siya dito sa cost sa property related to the wasting asset. Kaya wasting asset maning sa oil related nga projects. Then, another example of a provision is a court case na kaso. Example, after a wedding in the current year, 10 people died, possibly as a result of food poisoning from products sold by the entity. Legal proceedings are started seeking damages from the entity. When the entity prepares the FS for the current year, the lawyers advise that owing to the developments in the case, it is probable that the entity would be found liable. Therefore, a provision will be recognized for the best estimate of the damages because there is present obligation. Then we have a guarantee. So in the current year, an entity gives a guarantee of certain borrowings of another entity. So kani nga guarantee kada bitong sa guarantor na ay somebody will vouch for your credibility and capacity to pay. So, pag magpirmahan gani sa loan, so naaman sila papirmahan nga laing tao nga imong garantor nimo. So, siya may mo witness or mo testify nga ikaw na gusto mangutang kaya nimo ning bayaran. Okay? So, if mo guarantor ta, so we vouch on behalf of the maker of the loan or borrowing. During the year, the financial condition of the borrower deteriorates, and at year end, the borrower files a petition for bankruptcy. So therefore, ihalang gi-declare nga maglisod na gyud kog bayad ani. So since kita may guarantor, okay, we have to set up a provision for the best estimate of the guarantee obligation because there is a legal obligation arising from the obligating event, which is the guarantee. Okay? So, nga lang mag-provision man mi ma'am nga dili man kami may nakautang. So, kung magisgot magud ta, kung sa mga loans na siya, loan nga guarantee or mustanta as a guarantor, okay? So, pasabutan na niya kung ikaw may mo guarantor sa utang sa lain, you agree, di ba? That you guarantee the debt, okay? You guarantee that the debt nga acquire by another party will be repaid by a lender, okay? By the lender, repaid by the lender, or pwede nga ikaw as the guarantor will repay na siya, will repay the utang in case the borrower or katong maker of the loan defaults. Okay, again, pag mo guarantor ka ani, kung mo guarantee ka, you promise that you are going to assume or you are going to repay the utang of another person or another entity, which is the borrower, kung dili gani mo bayad ang borrower. Okay? So, we have to be very careful before we sign to any loan agreement. Okay? Kaya pag mo pirma ka as guarantor, then you will repay the debt of the borrower in case that borrower defaults or dili na mubayad. So since wala naman mubayad ning borrower ani, nya kita may ni guarantor, so kita may makabayad. So mananga na ay provision. Okay, now let's proceed to the restructuring. So PS 37 defines restructuring as a program planned and controlled by management and materially changes either the scope of a business of an entity or the manner in which that business is conducted. So, events that may qualify as a restructuring include, so these are examples of events nga matawag nga restructuring. Kung ibaligya or i-terminate ang line of business. Kung there is closure of business location in a region or a relocation of business activities from one location to another or relocation of headquarters from one country to another, or there is a change in management structure like the a layer of management is being eliminated or making all functional units autonomous, or there is fundamental reorganization of an entity that has material and significant effect on its operation. Okay? So nga naman nga mag-reorganize man siya, ma'am, ay mag-restructure na siya, ma'am. So there would be reorganization. Okay? Para ma-achieve ang greater efficiency and profit, or in order to adapt to a changing market. Usually, mag-restructure siya para ma-modify ang iyang financial and operational aspects sa company when the business is facing financial pressures. Okay, so pwedeng nagkalisod sila anang panahon na. So recognition of the provision for restructuring is required because a constructive obligation may arise from the decision to restructure. A constructive obligation for restructuring arises when two conditions are present. There is a detailed formal plan for the restructuring, which includes the following: business being restructured, principal location affected, location, function, and approximate number of employees who will be compensated for terminating their employment, date when the plan will be implemented, and the expenditures that will be undertaken. Second is that the entity has raised valid expectation in the minds of those affected that the entity will carry out the restructuring by starting to implement the plan and announcing the main features to those affected by it. Okay. Example, the board of directors of an entity at their meeting held at the current year end decided to close down all its international branches and shift its international operations and consolidate them with its domestic operations. A detailed formal plan for winding up the international operations was also formalized and agreed by the board of directors in that meeting. Letters were sent out to customers, suppliers, workers thereafter. Meetings were called to discuss the features of the formal plan to wind up international operations, and representatives of all interested parties were present in those meetings. So what will be the amount of restructuring provision? So in case na mag-reorganize, mag-restructure ang company, the provision on the restructuring will include only direct expenditures arising from the restructuring. Such expenditures are necessarily incurred in connection with the restructuring and not associated with the ongoing activities of the entity. For example, ang salaries and benefits of employees to be incurred after operations cease and that are associated with the closure of the operations shall be included in the amount of the restructuring provision, but it excludes the following expenditures such as cost of retraining and relocating continuing staff. Kaya padayon pa man ni, dili man ni siya related sa closure. Marketing or advertising program to promote new company image. Also, this is on the new or the existing na nga mga facilities or department nga dili appeal sa restructuring. Investment in new system and distribution network. So these expenditures are categorically disallowed as restructuring provisions because they relate to future conduct of the business and thus are not liabilities relating to the restructuring program. Then we have the decommissioning liability. So as I have mentioned in my previous discussion, that when we say decommissioning, so this is the removal. Okay. So a decommissioning liability is an obligation to dismantle, remove, and restore an item of PPE as required by law or contract. A decommissioning liability is also called as the asset retirement obligation. Example, On January 1, 2021, an entity engaged in extracting natural gas and oil constructed a platform, a drilling platform for 25 million and is required by the Philippine law to remove and dismantle the platform at the end of its useful life of 10 years. A straight line method is used in depreciating the drilling platform. The entity had estimated that such decommissioning will cost 5 million. Based on a 12% discount rate, the present value of 1 for 10 years is 0.322. Thus, the present value of the decommissioning liability would be 5 million times the present value factor of 0.322 or 1,610,000. The decommissioning liability is initially recognized at present value and included in the cost of the related asset. So what would be the journal entries related to this problem? So recognize the drilling platform, which is the sum of the costs, okay, cost of the drilling platform of 25 million plus the decommissioning liability. So that's 26,610,000. And credit to cash, this is a payment for the expenses on the drilling platform, and credit the decommissioning liability. On December 31, recognize the depreciation on the drilling platform. So debit depreciation, credit accumulated depreciation, that's 26,610,000 divided by 10 years. Another entry is to recognize interest expense on the decommissioning liability. That's 12%, which is the discount rate in the problem, times 1,610,000. So that's 193,200. Okay. In 2022, recognize the depreciation. That's 2,661,000, and credit accumulated depreciation, and then another entry for the interest expense. So how do we determine the interest expense for 2022? So you have the existing decommissioning liability, so that's 1,610,000, and then you have the interest expense of 193,200. So the carrying amount of the decommissioning liability is 1,803,200, and then multiply by the discount rate of 12%, so that's 216,384. So debit interest expense, credit decommissioning liability, that's 216,384. Okay, and what would be the settlement of the decommissioning liability? So meaning dismantle na nato ang drilling platform. So the journal entry would be to close the decommissioning liability. Okay, after 10 years niya, okay, after 10 years your decommissioning liability will reach the amount nga 5 million. Okay, katong gi-estimate. So that's why ang debit ani is debit to decommissioning liability 5 million, and then if the actual cost to dismantle is 5,500,000, so credit cash 5,500,000, and the difference is loss on settlement of decommissioning liability, which is 500,000. So on January 1, 2021, the decommissioning liability is 1,610,000. This amount is 12% interest compounded annually that will build up to 5 million after 10 years on December 31, 2030. Thus, the decommissioning liability is debited at 5 million. And to the recognized drilling platform, kaning 26,610,000. So debit accumulated depreciation and credit drilling platform 26,610,000. So what if there's a change in the decommissioning liability? Under IFRIC 1, changes in the measurement of an existing decommissioning liability shall be accounted for in the following manner. If there is a decrease in the liability, so ang estimate na to mugamay. So the decrease in the liability is deducted from the cost of the asset. If the decrease in liability exceeds the carrying amount of the liability, the excess is recognized in the profit or loss. If there is an increase in liability, this is added to the cost of the asset. However, the entity shall consider whether this is an indication that the carrying amount of the asset may not be fully recoverable. If there is such an indication, the asset should be tested for impairment. Okay, let's go to an example. On January 1, 2021, the plant of Sea Oil Company is 10 years old. The cost of the plant was 12 million with accumulated depreciation of 4 million. The plant had a useful life of 30 years and was depreciated using the straight line with no residual value. Because of the unwinding discount of 6% over 10 years, the decommissioning liability had grown from 1 million to 1,790,000. On January 1, 2021, the discount rate has not changed. However, the entity had estimated that as a result of technological advances, the present value of the decommissioning liability had decreased by 800,000. So what would be the journal entries for 2021? So there is a decrease in the decommissioning liability. So there would be an adjustment. So debit decommissioning liability 800,000 and credit plan asset. Then what will be the effect on the depreciation for 2021? So remember that the cost of the plant is 12 million, and then there's a reduction in the decommissioning liability that will resort to the reduction in the value of the plant asset by 800,000 as well. So the net cost would be 11,200,000. Then the accumulated depreciation based on the data is 4 million. So the carrying amount is 7,200,000. And this will be the basis for your new depreciation. So for the 2021 nga depreciation, that would be 360,000. Another entry would be for the recognition of interest expense related to the decommissioning liability. So the decommissioning liability on January 1, 2021 is 1,790,000. And then there is an adjustment. So, di ba, na reduction by 800,000. So, the balance is 990,000 multiplied by the rate. The discount rate is 6%. So, that would be 59,400. So, 59,400 is our debit to interest expense and credit to decommissioning liability.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.